basically Saudi Arabia didn't really want to take dollars for oil. They didn't want to. They wanted gold. Mm-hmm. But Kissinger went over there and sweet talked him and said, look, you use dollars only. We'll be your protectorate. We will protect you. Your fields will be good. And things are wonderful. Which was
our guest today is our good friend and a man who needs no introduction, a pioneer in the silver industry, David Morgan from the Morgan Report. Welcome back, sir.
Ivan, thank you for having me.
Absolutely.
So, Mr. Morgan, welcome back. What's been hot in the news recently, or in past years, was bank bail-ins, right? There was the Cyprus bank bail-in. We've had examples of Canada freezing the truckers' bank accounts over the protests that were happening in Canada. And now it's been taken to a whole nother level with the central banks freezing another central bank, Russia. And you've written a lot about this, about the risk of the banking system and the risk of bail-ins specifically. But you've never done it on our channel. Can you sort of share what you've been writing about on this topic and what people need to be aware about of the danger?
Sure, Jim. Number one that really perked my interest is a friend of mine in the industry sent me a documentary on the Empty ATM. And this was Argentina, I think it was in 2000. And basically they would all call it froze the accounts. So what they did was your bank account was still there. So you could have 20,000 pesos or whatever. But the bank said you're only allowed to take out 300 pesos a week. So you could be a millionaire, you could be a billionaire, wouldn't matter. The flow rate, the amount of cash you could get out was limited. So that was quite an eye opener as far as, another jurisdiction. You mentioned Cyprus, you mentioned Canada. So I did a interview with Stansberry Research a while back and did a deep dive on the bank bail-in. But all you really have to know is that it exists in the United States. I did an interview with somebody in the UK that has proposed that. I don't know if it's passed or not, but it all comes basically down to what I call the ownership theory of money. And that comes out of this book, which is Jerome Smith, which was the silver guru back when I was a youth. And the ownership theory of money is the same as what we preach on the Gold and Silver Advocates, is if you can't hold it, you don't own it. But the same thing could apply in the fiat system. If you have a bank account in North America and you don't touch it, you don't own it. And that's the law. I mean, basically what happens is the banks can be frozen because you are an unsecured creditor of the bank. And if the bank needs to bail in, which means take your money, or what you consider your money, but legally is their money, there's no legal recourse. And what do you get in return for them taking the money that's in your account? And the answer is you will become a shareholder in the bank, which is not something you probably wanted. So I've advocated always to have money outside the system, which means, money, gold and silver, usually outside of even a government type vault. And you can do it in a private vault, but not always. The other problem is cash. We're moving toward a cashless system. And if you go in and get banknotes, then you own those banknotes, which means that too is outside the system. So don't want to scare anybody, just bring to everyone's attention that a bank bail-in is legal, it does exist.
The FDIC insurance of $250,000, I think you're correct there. I haven't looked in a while. There's an implicit guarantee from the U.S. government, right? Even if the FDIC didn't have the money, the Fed or someone, the Congress is going to print enough money to print enough currency to make sure that that's covered, right? So they can guarantee the $250,000. They just can't guarantee the purchasing power of the $250,000, right?
Yeah, the exact words of Alan Greenspan. Yeah, you're right. I mean, the FDIC, for all practical purposes, is broke. They could never cover a real bank run, but that doesn't mean you wouldn't get, the funny money printed up and handed to you.
Well, that leads into what happened in Canada recently, and and this is going back over a month now. But I think it's relevant to talk about because before this happened, no one in Canada thought this could ever happen, right, Ivan? This was not even imaginable that this would happen.
is unheard of. For the longest time, Canada is pretty free. That's what everyone thinks. But yeah, until they did this, it's basically like declaring martial law, closed everyone's bank accounts, and yeah, brutal.
So what's, is this another example? If this wasn't a bail-in, but the fact that the governments can come in and just literally take, everything, take everything with no due process, no court case, no judge signing off on it. It just happened, right, David?
Yes, it did. And it's, the rule of law is obviously breaking down across the board on a global basis. If you're not scared by now, and you haven't woken up to the fact that you need to have money outside the system for your own well-being, then I don't know what to tell you. What I do know is when that took place in Canada that Ivan just outlined, is how many people rushed to, the run to gold, the run to silver. It happened.
Yeah. And in fact, I think it was Trudeau was just going hardcore at this with his emergency order, and then all of a sudden he flipped and he canceled the emergency order. And a lot of people were speculating at the time that the banks were freaking out because everyone was going to the banks, rushing to the ATMs, taking money out of the system. And there might have been quite literally a bank run happening under the hood that the media wasn't talking about it, but lots of people on social media were talking about it. And I wonder whether the bankers just were flipping out behind the scenes on the Trudeau government and telling them they got to call off this emergency order. They got to stop threatening bank accounts like this. It's gonna collapse the Canadian banking system.
It is. I haven't seen enough data to absolutely confirm it. But yeah, I think your conjecture is correct. If you go back to the 2008 financial crisis, there was what we call an electronic run on the banks. There was a video out there. I can't remember the senator's name that was talking about it, but the banks are freaking out again. And so we are in a very fragile system. I think everyone that watches Wall Street Silver is aware of that. There are things you can do financially to mitigate what may be coming in the future, or more of the same, since we've already seen it. And yet, I have to add, Jim and Ivan, that, money doesn't solve all problems. I mean, when you have a societal breakdown, it doesn't mean the end of civilization. And it doesn't mean, Mad Max, but what it does mean is more uncertainty and more angst with the people. They're more uptight. They're fear. I hate to use the word, but it's true because it's an unknown. And because of that, they're more on edge.
Well, that leads into a recent article I saw on Zero Hedge. The IMF is now warning countries may cut their dollar reserves in response to the US sanctions on Russia. And I think that this is probably happening. It only after what everyone's observed with SWIFT and what Russia's going through. And Russia, beyond Ukraine and Russia and the war, we've essentially launched the financial death penalty on Russia through the global financial system. And it makes people wonder whether are we killing the dollar at the same time, because other central banks might respond by reducing their dollar exposure.
Yeah, well said. I just add, you're correct. The days of the dollar are ending, and what manifests from here on out, we're not certain. But one aspect that's been talked about a lot is going to gold. And if you go back in history and you look at the Saudis in the first oil crisis in the early 70s, basically Saudi Arabia didn't really want to take dollars for oil. They didn't want to. They wanted gold. Mm-hmm. But Kissinger went over there and sweet talked them and said, look, you use dollars only, we'll be your protectorate. We will protect you. Your fields will be good and things are wonderful, which was, I guess, I would say it's a smart move, because you're able to print up dollars. And all those excess dollars that the Saudis had, of course, they went into the Rolls Royces and palaces and stuff, but a lot of it went into the U.S. debt market, the treasury bonds, bills, and notes. So it got recycled, and that was a boon to the United States. But we're past the limit there. Most countries now, as you just pointed out, Jim and Ivan, don't want the dollar. They have enough of them. Some don't. I know there's a dollar squeeze here and there. I'm trying to be accurate here, but basically anyone that's financially savvy understands the dollar's days are limited.
So David, a lot of people are asking, where do I find the best prices for silver? And the days of $5 silver are already gone, long gone. As much as it would be painful for it to go down, we'd all love it to go down to buy it at that price. But what's the best play for silver investors right now in the current market?
Well, Jim, I just have to give the caveat. I always advocate having physical first, but once that's accomplished, the best place right now is the junior silver miners, the exploration companies. They are the beat down to the beat down. There are very few pure silver companies, very few. Most silver companies aren't silver companies. They're copper companies or lead zinc companies. Even 13% of the silver that comes above ground is a result of gold mining. So that's number one. The other thing is, I remember an ad back in my earlier days about buying silver at 5 cents the ounce. And it was true. In that early days, in the early 2000s, Silver Standard would only buy projects that we were getting silver at 5 cents the ounce or less. And they built quite a company. The stock did astronomically well. We rode most of it up. I had a major uptrend line that got breached and said, I'm selling. The uptrend line is done. And that's telling me not to overthink it. So we made a very good gain. After that downtrend line was breached, what happened was Robert Quartermain, the CEO at the time, announced he was leaving. So the market knew, as it always does, something was going on with Silver Standard. But that's the way you play catch up. If you want to buy $5 silver or $300 gold, it sounds great. It's just a tough business. There's a lot of difficulty, especially on the junior side. So you want to speculate with intent. You don't want to bet the farm on any given junior project. And so what we do at the Morgan Report is we divide it up. Do big money in big companies, mid money in mid companies, and we speculate with money we can afford to lose. And it seems to work out well, the balance of that technique.
The silver market today is, right around in the low 25 area. Do you, what's your near term to medium term feeling about this? What should investors be paying attention to?
Well, always a lot of people want to wait and pick that sweet bottom, and bottom picking is tough. I'm pretty good at it. I'm much better at picking tops. But regardless, how low can it go? And the answer is, looking at your chart, we've got the answer in front of us. It's 2150. That's about it. Will it breach the 250-day moving average again? I don't think so. I think we're pretty solid above 2450. But yeah, we could get whacked. A lot of people say, well, what if the war drums subside or even the outbreak of peace happens? Wouldn't that take the metals down? The answer is yes, it would, but it'd be very temporary. I think actually it's being kind of priced in already. So I would be, longer term, anything around 25, I think could be happy. If you want to time the market, go ahead. I don't think you're going to have an opportunity to get it other than a spike low. It could be like a 1 or 2 day event. I don't see anything except strength based on the commitment of traders and how much selling has to take place on paper to bring the price down. The retail market's been on fire since Wall Street silver started. The premium on real silver for real people has been astronomically large.
Yeah.
And even in the commercial bar market, there's premiums now, which indicates that there's tightness. There isn't a silver shortage per se, but yet, I can play both sides of that. I mean, when you can't put out the planchettes, the blanks in quantity sufficient to meet demand by investors, then that is a shortage. And that's, again, a retail product. But it makes you think, well, why not? Especially with the markups that you get on making a silver coin. The markups are huge. So if you're in a silver business or a minting business, you'd be buying commercial bars hand over fist to get that premium. And why aren't they? Why do they put out an announcement that they're not going to do peace dollars or Morgan dollars at the US Mint? Well, these are very specialty items, and I get it. They're collector items only. They're not the basic bullion coin like the Silver Liberty, commonly referred to as the Silver Eagle. Nonetheless, it's interesting that they make that announcement. So I believe if we had a real market for silver coins in Canada and the United States, like you could go to any bank and buy it, or you could go to any post office and buy it, I think you would have a huge amount that would be bought by the public. They just don't know where to get it or how to get it. But if it was, let's say, made available at public locations like a bank or a post office, I think you would see the amount of silver purchased by the public probably quadruple what it is right now.
Yeah. Well, thank you very much for the update, Mr. Morgan. As always, we really appreciate it. And I'll probably call you back and invite you on again sometime.
Okay.